Welcome to Stock Talk with Mike. So obviously the market across the board has been dropping fairly heavily this week. I just want to say this is normal. I want to talk a little bit about investing behavior and what I'm doing right now and what I'm going to be doing in the coming weeks if we continue to see a sell-off in the weeks to come. So this is a 5-day chart of two indexes, the S&P 500 in red, as well as the NASDAQ Composite Index in blue. The NASDAQ has more of your high growth tech companies. So typically when you see a sell-off or you do see that index drop a little faster, we've also seen leading up to this sell-off this past year, the NASDAQ majorly outperformed the S&P 500. So it's not surprising to see it sell off a little harder. So the S&P 500 is actually only down 2.2% over the last 5 trading days, and the NASDAQ is down 5.4%. But volatility and downward selling in individual stocks, especially really high growth stocks and stocks that have performed very well over the past months or even the past year or more, have seen quite the sell-off, much higher than these index averages. I just want to give a little perspective because there's a lot of big headlines out there and panic going on. And honestly, what we're seeing is a little bit of a correction so far. It's far from a market crash. And just back out a little bit on these indexes. This is looking at a 1-year chart. I think anyone looking at this chart would have their money invested looking at this growth rate and seeing where we're at. This drop that we've seen in the last few days seems really powerful and big, but honestly, we're not far off where we were just a month or so ago. Like, look at this chart. It's really just a blip on the radar, even of the 1-year chart. So again, it's important to have that perspective because the last thing you want to do is be panic selling, especially as your stocks are dropping. And I'm seeing a lot of that on some of the discussion forums. I'm hearing people say, that's it, I'm out, this stock sucks. You have to remember, a lot of this selling is indiscriminate. It's not about an individual stock. So you have to keep that in mind. There's always sort of two forces at play when you're investing, and it's individual stocks and their performance. But at times, no matter how well that stock is performing on an individual basis or how the company is performing, other factors might be at play that are stronger forces that may more drastically influence the stock price, like major market sell-offs. And those is where you're going to see the real separation and opportunities created when there's indiscriminate selling. So don't panic. Last thing you want to do is panic sell. If you wanted to sell some of your positions, the real time I believe to do that is when we were seeing stocks flying high and there's a lot of excitement in the market, like even as early as last week, right? And the companies you're already holding, if you're a long-term investor and you're investing in quality companies, you should really like those companies even more this week and today than you did last week. They're trading cheaper. And you should be excited about that because if you have any more capital, you have cash on hand, if you've been trimming along the way, like I think everyone should be in this strong market we've seen going into this sell-off, hopefully you have a little bit of a cash cushion and you can start adding to your highest conviction companies or adding to the top companies on your watch list. Looking at some big growth companies and just how they fared during this sell-off. This is a 5-day chart and I got 5 stocks on here. I got Tesla, Square, Teladoc, Shopify, and CrowdStrike, and they're all down. So look on the 23rd, all of them, that's indiscriminate selling. Look how they all just dropped like a rock on Tuesday morning, right? That's a great time to think about taking up a position or adding some shares because everything was dropping significantly. It has nothing to do with individual stock performance other than the fact that stocks that have been performing well on a company basis and a share price basis are the ones that most likely are going to fall the hardest. Because you think about it, you have a lot of people that have a lot of profits in that company looking to ring the register and may have a lower set price in their mind where they're willing to buy back in more shares given that they have had such a run up in these companies. So keep that in mind. What I like to do is actually set good till canceled orders with about 20% below maybe where I last took some profits working around a position. And then that way it's kind of programmatic and I don't have to try and time it or watch a dip, especially if I'm at work or or sleep in or whatnot and might miss the opportunity. That way it's just triggered when it hits a certain level. And if it continues to drop, oh well, I might look at even picking up more shares if it sells off significantly more. But looking at these 5 stocks, they sold off anywhere, just this past 5 trading days, all of them have sold off from anywhere from 10% with Shopify to 22.5% for Teladoc and everywhere in between. So that's pretty significant sell-off for just 5 trading days. But again, just putting into perspective, let's back out and look at the 1-year chart. It's really just a blip on the radar. These still look like phenomenal charts. Tesla is up 309% in the last 52 weeks. And the lowest on here, Teladoc, still up 122%. So all these stocks, even with the recent sell-off in the past year, are up anywhere from 122 to 309%. So if you're a long-term shareholder or long-term investor, this sell-off is still, we could have a much larger sell-off still, but what we've seen so far is really not that significant in the grand scheme of things, even though it seems really chaotic and you're seeing losses accumulate. And if you're new to the market, it can be really alarming. But the last thing you want to do is try and completely time the market. It might be counterintuitive. You might think, well, why would I want to lose more money? Why don't I just go all in cash? Well, the issue is, it's part of the cost of doing business is participating in the market. The only way you can't make money in the stock market for sure is by not participating. And if you go all cash, do we know when the market's going to turn around and start going up? We don't, right? So if it turns around and really starts going back up tomorrow, it's really hard to redeploy that capital given you took out lower, right? So it's a bit of the cost of doing business. One thing you can do is when we have a really hot market though, is start trimming your biggest winners. Because when we're seeing some of these stocks run up hundreds of percent, 200, 300, 1,000% even in a year's time, a number of stocks this past year, it might be a good time to take some profits in some of those positions. Not totally sell out if it's a long-term investment, but just trim them back a little bit, raise a little cash, and combine that with the new cash you're hoping to continue to add to your accounts so that you have a bit of a cash stockpile so you can redeploy that cash when you see a market sell off like this. And it's interesting. So you look at this 1-year chart, but if you look a step further and look at just the year-to-date chart, all these stocks are actually still up year-to-date even. So that's the thing, is I'm looking to buy in as these stocks drop, and a lot of them still haven't dropped to what they were a month, 2 months, 3 months ago. So really, we've seen such big run-ups that it's not surprising that some of these companies are selling off really hard. So look at that Teladoc, which has fallen the hardest out of these past 5 trading days, it kind of makes sense because they're also up the most year to date, even after this sell-off. They're still up 27% year to date, even with the massive sell-off we've seen of over 20%. And even Tesla is just slightly down now on the year. So again, don't panic. Hopefully you have a bit of a cash position so you can start slowly adding. Again, even with that, I don't try and time a market bottom either. So I've been buying pretty much every day, and I'm really excited about this market right now. I was actually getting really frustrated how things were just running up. And if you have a long-term investment horizon, this is a really good thing for your portfolio. It's nice to have a reset where stock prices come back in. The faster they run, the longer they run, just a harder sell-off we're gonna have. So I think this is really healthy seeing this sell-off. I don't know what it's gonna turn into or how far it's gonna go, but that's why it's good to start picking away and not putting all your cash to work, but start putting some more of it to work. And if it continues to drop, get a little more aggressive with your buybacks of shares. So I've already invested quite a bit of money back, probably about 10% of my cash position. And I'm still sitting overall in my portfolio about 26% cash. I was more like 30% cash. But if we keep seeing a sell-off going into next week, I'll definitely putting a lot more to that to work. Like in March, I had in February, I think about 20% cash, and I had that down to about 5% cash in March when we saw the big sell-off. So I do similar again if we saw a bigger sell-off or we got into correction territory and saw sell-offs across the market of over 20% or more. And honestly, if I didn't have any cash and I was fully invested, I would just stay fully invested at this point. I definitely wouldn't sell any of my long-term holds while we're seeing this big sustained sell-off like this. That's the only way you can really lose money in the market. If you're investing in good companies with strong prospects for the future, I think you'll be just fine holding for the long term. There's actually data that supports that you're actually better off statistically being fully invested rather than having a cash stockpile. So good luck out there. Happy investing.